Hold on a second. Good morning, folks. We'll be starting in about 7 minutes. Welcome, welcome, welcome. Folks, we'll be starting in just about 2 minutes. Thank you for being patient. All right. Oh, good morning, everybody, or good afternoon, everybody. Got a light room. I think they're doing something. Profit panel is wrapping up or something, but we have a lot to talk about. By the way, I know you guys can't see it, but I have Mia on my lap right now. I'm working from home, and welcome everybody. Matt is not here. Ironically, he was planning on being out today, but in addition to being out today, he got sick. So, so he is actually he's actually sick today, which is unfortunate. Let me move my computer closer to me so I could actually see what the hell I'm doing. All right. Thank you. I think it's a stomach bug or something. What is Roger drinking? It's a LaCroix. It's just bubbly water, essence bubbly water. There's nothing in here. It's one of these LaCroix. So I'm staying away from diet soda. Let me go ahead and share my screen with you guys. You don't need to be looking at my mug. Although I got to say, this video camera is so much clearer than everyone else. Mia, you want to say hello to everybody? If you get up, they'll be able to see you. Otherwise, oh, there you are. She looks like she's about to turn around. There she is. You can kind of see her shadow and like her tail and all that right there. There she goes. Let me kick her out of the room 1 second. There you go. All right, we're back. Good afternoon. Yeah, just a chop. This is just a chop fest. Let me go ahead and share my screen with you. And I'm going to do the best job I can. We don't have Raleigh here today, and we don't have Matt, but you guys have me, okay? So let's see. Petra, end of day yesterday, AMD, Hood, and Cisco. Petra, where did you get those ticker symbols? And why aren't you sharing with everybody? This is good stuff. I'm going to have to share my own testimonials today. Look at that. Let me get my testimonial page out. I imagine everybody made money on Fast, and everybody made money on Google, and everybody made money on AMD, and everybody made we've been doing pretty good. We've been so happy to join the VIP room today. SB, glad to hear that. Gold tariffs 3,500. I think I prepared you this morning pretty well for the date. Now let me say hello to everybody. I have a really important session today, and it is Friday. Thank God it's Friday. Steve, how are you? Debbie, John, Richard from Puente Gorda, Jill, good morning or good afternoon. Richard, excuse me, I'm all worked up. Tammy, uh, Reynold, Stephen, Ron, Chris, PTD scan and coin customer service install was great. Oh, that's very good. Very, very good. Let me tell him that. Let me tell them that. He'll be happy to hear that. Hold on. Let me tell him that. So it was Quentin, huh? There it is. Good, 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 good. They'll be so happy to hear that. Bill, David, bonjour to you too. Cyrus, Becky, JB, Kathleen from the Big Island, Gregory, Chris, David, Moondog, John. I think just got life platinum today, if I remember correctly. Congrats, John. Good job. Smart decision. Ellen, Pink Sparkles, Moondog, Stephen, Bob, uh, John, Jason, Nick, Robert, CJ, Peter. Hey, Peter, John. T-Bus got something going. That T-Bus, he's always put a wrinkle in my style. John is on vacation. Candy, Brian, Michael, Bob, John, Chris, Disney playbook wrapping up. Yeah, Disney went up and then crashed. Yeah, that mouse. John, Shannon. Uh, there's no sugar in here. There's no sugar. I can't drink anything with yeah, bubbles, just bubbles. Yeah, I got to get away. That diet soda, I've been drinking it for 30 years. It ruined my bladder. It literally ruined my bladder. I had to get off of the diet sodas. It was horrific like 3 years ago. Brian's dog is under his desk. Well, where else would he be, Brian? Duh. Yeah, those are good drinks. Yeah, found support. Found support. Petro made money. Good, 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 good. Everybody's doing good. Everybody's happy. They are poison. You're right about that. William and Wesley and Don. Good, good, Don. Very excited to have you. Claudia, Earl, Shannon. Platinum and Diamond, from what I understand, are the same, Shannon, but I'm not in sales. But John just got in, and I highly recommend you guys got in too. That way you'll get everything that I have coming for future and past. It'll be just one cost, and then there won't be any more things to buy. Kendall and iPad and Jody. Folks, I can't go through everybody because I'm a one-man show today. But folks, switch to everybody. Switch your thing to everybody so you guys could. And today we had 330 thumbs up and 688 people, which is amazing for an August. That was like a wet dream a year ago. So this is fantastic. All right. So folks, everybody's happy. Everybody's doing good. I don't have any complaints. We opened up yesterday the pit webinar completely the entire time, and I did not have one nasty email, which is pretty good. Even if you can't say our name. CJ, I'm sorry if I can't say your names. I am so sorry if I'm mispronouncing somebody's name. It's like the last thing I want to do. Naples fan, if you're still in KView, you may get exercised. The reason we got out is because we didn't want to get exercised. You're welcome, Naples fan. You're welcome. So happy to hear that. So happy to hear that. Let me just post that here. And now I want to talk about the market real quick. So far, if you look at the SPY, which we'll look at right now, I gave you guys some levels this morning. I gave you guys some levels. Now, this is a real good. Some of you may be saying to yourself, Roger, what's in it for us? Why should we come here? Well, let me show you something. This morning, I gave you these levels. It was, if you don't believe me, go look at the video. It's there. It's in the live tab. I gave you this level, 634.75 and 637.01. And I explained to you why these levels are important. And I explained to you that intraday highs, pre-market highs, pre-market lows, and intraday levels are very, very important. And I want to ask you guys an interesting question. What if you had an ability to be able to pick the highs and lows? Look, this is the 5-minute chart. I drew this at 8 o'clock in the morning for all of you. You were all here. I was actually sitting at this desk. I haven't moved in 4 hours or however long it's been. How well did these price levels work, I ask you? Here, I drew this for you in the morning, and I haven't changed them. I haven't even, I mean, I just put them on the screen. How well did these price areas work? Bill says almost perfect. I don't know, Bill. If it was any more perfect, I would be like accused of curve fitting. The point is, so Roger, what are these levels? Intraday support and resistance and swing highs from the previous day and swing lows from the overnight. So, overnight high, overnight low, previous close, and all the bumps in the previous day. The market actually holds those levels. Moondog, I don't need to use Moon. I know what Bookmap is, and I know a lot of guys who use it, but I don't need it. I don't need it because of my eyes. I don't need it. The reason most guys need Bookmap is because they can't spot order flow with their eyes. I could spot order flow with your. If you do this as long as I have, you'll be able to spot order flow with your eyes. I promise you. But it's a good product. It's a little confusing for me. I mean, not for me, but it's a little confusing. See? Well, I mean, look yourself. If you don't believe me, look for it yourself. You should write this down. Pre-market high, overnight market high, overnight market low, the last closing price, the closing price of the day, previous close, which is right here. Those levels are very, very important. Very, 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 very important. Yeah, I like to use 1,000 tick charts. I like to use 1,000 tick charts, Mark. Sometimes if I'm scalping. Depends. Are we visually? It depends what we're visually backed. You see, this all goes back to this. See what you're doing right now, Dave? You're not doing it intentionally, but let me explain to you what we're dealing with right now. We're dealing with this. The greatest enemy is not ignorance, it's the illusion of knowledge. Context. Are you asking about intraday charts on the index, or are you asking about swing trading stocks and day trading stocks in the pit? Do you see the problem? What are we talking about? See what the problem is? Context. See, you go to a webinar, you watch a 5-minute video, some schmuck tells you to use these levels, and you're like, okay, I'm going to use these levels, and you don't even understand what, where, when, why. You're just using these levels. It doesn't work that way. Illusion of ignorance is this is why I keep telling you context is the most important thing you're ever going to learn. Context. So it works. What I'm showing you right now, the overnight high, the overnight low, that's not really good for stocks. That's on indexes. Intraday 5 minutes. So to answer your question, Dave, indexes. 5-minute intraday, trading zone live kind of stuff, Alpha Zone Pro kind of stuff, not trading pit or stocks kind of stuff. Are we on the same? You got it now? Okay. See, if we're doing this for stocks, it'd be like, what the hell is he doing? That's useless. That's just random nonsense. It is. If you do this on stocks, it's random nonsense. Good. I'm glad you got KView. Yeah, good, Bob. So what did you buy it at? 8, 9, 10? Remember, Bob, somebody said yesterday, what's the big deal with searching for pennies? Well, Bob bought something at $800 at $80 a contract and sold it at $140 a contract. Here, let me repost this. Now, multiply that by 100 times. That's $8,000 into $14,000. Does that sound like pennies to you? Does that sound like pennies to anybody making $6,000 overnight? Because that's what Bob did. I'm sure it was. Because somebody yesterday's like, why are you making such a deal of these pennies? You mean like making 40% or 60% in an hour, those pennies? Okay. All right. It is amazing. What service is that? That's the pit. That's the pit. And yes, we had another. Did we have another winner? No, we didn't have any. We just got into a trade. Okay, all right. We got plenty of people here. Let's see how many people we got here. We got 500. Yes, we got plenty of people here. We got plenty of people here. And KView, let me know how. And KView too. Same for me with KView. Excellent. Yeah, that's my bonus pit trades. Bonus pit trades. I don't even count those. Those have an accuracy of about 85 to 90%. And those type of trades, calendar trades, which I'll talk about right now. Do you guys want me to talk about calendar spreads first? Do you want me to talk about calendar spreads, or do you want me to talk about the other kind of spreads? Because I was going to talk about both of them. Okay, all right. Okay, so I'm going to talk about both of them anyway. All right. So a time spread and a calendar spread is the same thing. Okay. So what we are looking to do, I want to explain to you what we're looking to do. I'm going to talk about both of them anyway. So what we are looking to do is we are looking to take advantage. All right. So, okay, you know what? I'm going to explain this in a different way where you guys will understand. What's the problem with buying options or stocks right before earnings comes out? There's no trick questions here. Just be real basic. What's the problem with buying options before earnings? Okay, unknown, that's one. What else? Implied volatility's high. Bingo, 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 big volatility baked in. Yeah, as a matter of fact, let me show you something. Look, not only is it baked in, I mean, I literally give you the expected baked in volatility right here. I tell you what it is baked in a week ahead. That's the expected move. This right here is priced into the option. If I know about it, don't you think the market makers know about it and they're going to price it into their option? Okay. So we're talking about calendar spreads. Okay. So there's two problems. There's two problems with earnings. So I want to explain to you what the problem is, because if I don't explain to you what the problem is, if I don't explain to you what the problem is, you're never going to really care about the solution. So the problem is this. Earnings are a binary event. In other words, if you take 100 earnings, you will not know how many are going to open up, down, sideways. Have you noticed recently we've been having good earnings on mega caps and the stocks have been going down the next day? You've seen that too, right? Right? You've seen that too. Okay. So what are we? Let me just check something here. Okay. So let's just say you got a double problem. And this is why Uncle Roger never, ever, ever, ever buys options in advance of earnings, because a $2 option will already cost $4. I'm making these numbers up to illustrate a point. Remember, I taught you that implied volatility is the biggest factor when it comes to the price of an option. Remember, I told you the day after the crash, the market was just being flat. The market didn't move. The options went up like 8 times in value. They went from like $2 to $16, the calls, because implied volatility changed. Okay. So my point in explaining all this to you and teaching you all this is very, 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 very simple. Is you have two problems before earnings. We don't know what's going to happen with the stock. And if you think you do, then you're a fool. Then if you think you do, then read this again, because I promise you, you don't. You think you do, but you don't. Okay. Read this. If you think you know what's going to happen next, read this 10 times. He is smarter than you, I promise. And I'm more experienced than you. So trust us. We're not trying to sell you anything here. Earnings are a binary event. If anybody ever tells you it's not, laugh in their face and tell them to prove it to you. Okay? They won't be able to prove it to you. On top of that, whatever's expected in earnings is priced into that. So your problem is you have a move and you don't know what's going to happen, and you have an expensive option. So who are you going to call? You're not going to call Ghostbusters. So how can you use that to your advantage? Well, let me try to help you out. So what if you had the ability to take that expensive option and sell it and finance your retirement? Whoa, 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 what? You're not going to finance your retirement with one trade, but if you do this for 5 years, you will. So what if that option that I tell you not to buy, you sell? You sell it to someone. The expensive option that has all that implied volatility, you sell it. What? Yeah, you sell it. Are you telling me that I'm going to be naked? No, I never said that. And then you buy the same strike price the following week. So it's Thursday afternoon. Thursday, not Friday. Thursday afternoon. Earnings are coming out after the close. Tomorrow's Friday. That option is really expensive. So instead of buying it and is the stock going to go up? Is it going to go down? What's the president going to say? We don't care. We're selling it. Well, Roger, you're exposing yourself to unlimited risk. No, I'm not. Because let's say let's say that we're doing it on Microsoft. And let's say that we sell the Microsoft 520 strike price. Look. Here. $1.75. You see how next week's is 610? Well, if Microsoft had earnings tomorrow, this would be 610 and this would be 630. Do you guys understand? This is the one we sell and this is the one we buy. But Roger, they're $4 apart. Not before earnings, they're not. You know how much we usually pay? 15 cents, 20 cents, 30 cents. Yes, I'm able to sell this option and buy this option before 20 minutes before earnings for 20 cents, for 30 cents. How often do I get a chance to do it? 2-3 times a week during earnings. Now, let me show you something interesting. Let's say, hypothetically speaking, let's say that tomorrow, remember it's Thursday, right? We're going back in time because there's no earnings on Friday after the close. So it's Thursday. So imagine it's Thursday and imagine that Microsoft tomorrow opens up at 1,000. Ah! Well, you're BK'd right here, but this made it all back. So you're going to get exercised at 520 and you exercise yours at 520 and they cancel each other out and you lose the 20 cents difference between this and this. What if the market opens at 0? Microsoft, Bill Gates exposes himself as what's his name's that pedophile, Jeffrey Epstein's best friend. Microsoft goes to 0. I'm making all this up. Well, guess what? This is going to be worth 0, and this is going to be worth 0. So you lost 20 cents. Okay. But how about this scenario? How about the scenario where tomorrow morning, Microsoft opens at 519 or 518 or 517 or 500 or 400 or wherever it wants to below 520. This expires worthless, and this gives me a full week to make my profit. Now, what if next week Microsoft goes from 520 to 525? I just made 5 points, $5. How much was my risk? 20 cents. Let's say Microsoft next week doesn't go anywhere. Great. I'll be able to offset it. I'll be able to get a lot of money for this. 3, 4, 5 times what I paid. So Microsoft goes up a little bit, I make money. Microsoft goes down a lot or a little bit, I make money. Or don't lose any money. Microsoft slowly goes up, I make money. How much did I spend for all of this? 20 cents, 15 cents. How much did we spend for what was it? KView. How much did we spend? 8 cents, 8 to 10 cents, right? 8 cents. Thank you. Bob, post for everybody. Post for everybody. It was between 8 and 10 cents. Everybody's bought it, and some folks sold it for 12 to 14 cents. Now, what if it just stayed there, and then next week, KView just starts going up? Here. KView. What if KView starts going up next week to 23, 24? I have till Friday on this option, and I own it outright, and I paid 8 cents for it. So what if KVU goes to 23, excuse me. I just made 10 times my money. Now, isn't that the only way to trade earnings? So do you understand, after trading earnings like this, you will never, ever, ever trade earnings any other way again? Do you guys understand what I just did? We sell the option that's coming, that's really expensive, and we buy the one after earnings beforehand. See, like, look at right now. It still has a lot of implied volatility. Look, the one that expires today on KVU is $1.20, right? The one that expires next week is only 82 cents. Volatility crush. So what we're doing is you have a chance to make unlimited profit on earnings for literally pennies on the dollar. Do you guys understand? By selling now, is it that easy? Everybody would be doing it. What are some things we have to take into account? The ATR of the stock. We have to take the ATR of the stock into account. We have to take the cost of the option into account. We have to take into account the probability that the earnings estimate is not going to give us the move we want. What? I'm going to repeat that again, and you better be writing. We have to have a database. We have to have a database of how many times the stock did not perform as expected. Well, Roger, where do you get that database? You don't. You know why? Because nobody has it. You know why? Because nobody uses it the way I do. So you know what that means? That means my ass has to make it myself and put it in data miner for you, which is exactly what I'm going to do in the next couple of months. Ugh. Did anybody have any questions, any comments, feedback, or questions so far about what I've been talking about? So, Sunika, you're watching on YouTube. You can go right now and rewatch it, and you rewatch this whole segment right here. So I don't have to repeat myself. Add the money, Bill. Add the money. No, it can't. I tried it, Mike. Not the way. Comparison of past moves based on past expectations. No, it can't. Okay, so I wanted to see if you guys had questions about this. Very, very important. Needed to see if you had questions. Okay. Any specific questions? If it goes up a little bit, you don't lose money. If it goes up a lot, you lose money. If it goes down a little bit, you make a lot. You make a little bit of money. If it stays where it is, and then next week goes up, you make a lot. You can make unlimited amount of money. Think about this. So let's say that KVU is below 2150 today. Today's option expires worthless, right? And you have a full, we're at 2122. So think about this. You sold the 2150 and you bought the 2150. You still have a 2150 that doesn't expire for 7 days, and you paid 8 cents for it. A lot of things can happen to this stock in the next 5 days. And that's already after you made 40% or 50%. Just FYI. How many? I'm not sure, Dave. That's depends on the broker. Yeah, just use calls. You could use puts, but calls have more implied volatility. Okay, so I make it look easier than it is. It's not as easy. You need to have some data before doing this. You need to know how many times. The stock has underperformed expectations. You need to have this information. Very, 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 very important. You have to have this information. If you don't have this information, you're not going to have it. So I'm going to actually scrape it and get it to you. All right. No, Mark, no. That's if they're both in the money and you're not doing anything before exercise. That's. I'm not going to get into that. It's just too much to talk about right now. I'll have to do like a full session on this. like a full session on this. Okay. Let me see here. There was somebody asked me something. Yeah, they're both calls. These are just, and folks, all we're doing is a time spread. It's a time spread. Look up calendar spread. We're doing earnings calendar spreads. That's what we're doing. Earnings calendar spreads. We're taking advantage of the implied volatility. No, it works on a put too, but I like calls because they have more implied volatility. Okay. Now, I want to answer some regular option questions for you. Okay. So now what I'm going to talk about right now, these are my criteria in the pit. You could use this criteria for any of your trades, any of your programs. You could do this. You don't have to have the pit for this. Okay. I'm explaining to you that a lot of people in the pit ask me these questions. So I'm going to kind of kill three birds with one stone. I'm going to answer the questions and I'm going to answer the questions and I'm going to explain to you. So there's really three or four things you need to know. Okay. The first thing is, let me, notepad. Let me get a notepad. Notepad. Here, let me get a notepad. Okay. All right. So you guys could see my screen right now. I can imagine. Yeah. Okay. So let's say we want to buy. If I say to you, buy, I'm going to make up the ticker symbols just to, I'm going to talk about that, Sunita, and other stuff. Buy IBM now. Okay. 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 I don't want you to buy IBM now. As a matter of fact, I don't like IBM right now, but uh, just using this as an example. So you got a couple of choices. You can buy the stock, buy the call, buy the spread. Here, buy the debit spread. That's you could do. You could also sell credit spread. Okay. That's really all you could do. Okay. That's all you could do. And if I say short IBM, you can short the stock, you can buy the put, you can buy the debit spread, you can sell a credit spread. Okay. Those are your only options. You can put any ticker here you want. I'm just trying to show you this as an example. Now, okay, so there are some considerations here. Okay. How expensive is the stock? What are we looking for the stock to do? Okay. Is this helpful when I have my screen up like this? So, how expensive is the stock? What are we looking for the stock to do? How much time do we want to give it? Those are the three basic questions. Three basic questions. Actually, there's some more. Liquidity. Okay. I want you to understand it may seem like we're dealing with a lot, but we're not. We're just answering some basic questions. And if you're a beginner, this may seem complicated, but if you've been doing this for a while, this is just a very simple process that I'm showing you. Okay. There's nothing new here or different or convoluted. So let's say I want to buy IBM. Okay. I want to buy IBM. Okay. I can go and buy IBM. I can buy 100 shares of IBM, buy the stock right here. Call option. Okay. Call option. Okay. So the next question is, what strike price? My strike price, irrespective of these answers, is always going to be 0.70. 0.70. 70. In this case, it's negative 70, but 0.70, okay? What if it's 68? What if it's 73? Don't get caught up in the BS details. That's 0.70, between 65 and 75. 0.70, okay? Okay. All right. Real simple. We don't have to worry about the strike price. We know the strike price. We know the strike price. It's right there. So right here, where's my delta? There's 63, here's 85, here's 77, here's 6. Here are my deltas right here. Okay. You get the delta. You don't have to figure the delta out. It's given to you. Okay. Well, Roger, what if you're day trading? What if you're buying for a year? And I said delta 70. Delta 70. Delta 70. You capiche? Whether you're buying for today, whether you're buying for the next 20 years, it's delta 70. That's it, delta 70. Well, Roger, the option is just too damn expensive. Okay. We move on to the debit spread. We start with delta 0.50, which is right at the money. Usually, by the way, not always, but usually 0.70 will be 2 strikes in the money and 0.50 be right at the money. So debit spread, you start at delta of 0.50. That's where your originator is. Where's your ending strike price? Wherever you can get better than 50% risk reward. Well, how do you measure reward to risk? Let's say you buy the 20 strike price and you sell the 21 strike price. Your profit potential is $1. That means you better be paying less than 50 cents for it. How about let's do IBM, okay? IBM. Let's say we buy the 245 and sell the 250. You better be paying less than 250 for it. Take the difference between your spread, divide it in half, and make sure you're not paying more than that. You will have to watch this video 5, 6, 7 times. But everything I'm telling you is everything we do every single day. Okay? So debit 50, better than 50% risk to reward in comparison to the spread. Understand? Very, very simple. You can't get 50 cents, you move on to the next strike price. If you can't do $1, it's $1 spread, you can't get 50 cents, you move on to the 250 spread, you try to get $1.50. You can't get $1.50, you move on to the $5 spread and you try to get $2.50 or less. 50% or less. That's what you should be looking at. So remember, spreads are always in $1, $2.50, $5, and $10. So it's either going to be 50, you're either going to be paying 50 cents or less, $1.25 or less, $2.50 or less, or $5 or less. If what I sound is sounding very confusing, once you learn it, there's nothing else to learn. This is it. I'm giving you the whole kit and caboodle, okay? Now, let me just open the chat for a quick second and see if this is helping anybody. I do have it in the chat. I have it right here. No, you're going to have to watch the video again. I'm not going to put it in the chat, Earl. I think I'm doing enough. My assistant's not even here. The guy who hosts me is not here, and my assistant's not here. How about you just watch it again 5 or 6 times? Here's a link. Is this being helpful to you guys? And if you've been with me for a while, then you're like, this is really helpful to you guys. Here's a link. I haven't opened the chat even for a second, by the way, in case I don't even know what you guys are asking me right now. And I think I'll leave it at that. I think it's for the best. Outstanding, good, helpful. Thank you. All right. Let's continue. See what happens when I turn the chat off? I'm going to close the chat. All right. So the chat is closed. I only see it on YouTube, and there's only 77 people there, and they don't like me. They don't like to ask questions very much for some reason. Also, I'll be having a webinar. This is the last day. And when I say this is the last day, this is the last day to get your $500 discount from the pit. Today's the last day. Here's the link to get into Zoom room for all of you people on YouTube. Okay. And not yet. You don't have to come in yet, but in about 15 minutes. So let me continue this. I'm going to continue this. So very, 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 very simple process. This is it. I'm laying out the entire process for you right here on this page. So the next question is, How expensive is the option? What are we looking for the stock to do? How much time do we have to give it? And liquidity. These are the only four objectives we have. These questions will prompt which one you play here, you see? So let me show you something so you understand. Naples fan, if you choose $1 or 250 or 50, it depends. What are you paying? If you're choosing a dollar spread, your butt better be paying less than 50 cents. If you're choosing the 250 spread, you better be paying less than $1.25. If you're paying the $5 spread, you better be paying less than 250. So I want to explain something to you. This and this are the same. This is just if you want to buy, and this is if you think the stock is going to go up, you look here. If you think the stock is going to go down, you look here. These questions don't determine the direction of the stock. These determine which of these you choose, That's all that we're doing right now. So these are all your choices in the candy store. And these are the questions right here you have to ask yourself to determine, are we going to go A, B, C, or D? That's all we're doing right now. And if it seems overwhelming to you, beyond this page, it doesn't go. So everything you need to know is going to be on this page. And you see, there's not that much to learn yet. If you watch this video 4 or 5 times, you will be able to figure this out, okay? I promise you. So let's continue. So we're picking, let's change the ticker to Microsoft. I'm sick of looking at IBM. Okay, Microsoft, okay? So we like Microsoft. Okay, that means we don't have to worry about this. We only have to worry about here. Oh, we want to short it? Okay, then we're looking here. Remember, I spent 3 days already explaining to you this week how to find the stock. Now we're moving to the next level option, okay? We already have the stock. But how much can we make in profit? 100%. If you pay 50 cents, you can make $1. If you pay $5, you can make $10. Double your money. Your max is double. Max is 100% profit, Naples fan. All right. And folks, I have a perfectly good email address that you can email me. Okay. So let's continue. Okay. So, okay. We like Microsoft. Okay, great. We're going to forget about puts. We don't have to worry about puts. We can just erase this completely. Forget about that. Oh, we're going short. Oh, okay, fine. Let's here, let me undo and undo. Let's erase this. So which stock are you going long or are you going short? That's whether we're going to look here or here. You're going to go long. Okay, great. We're going to buy Microsoft. We looked at the chart. We looked at relative strength. We looked at the VWAP. We looked at all that stuff that I've been spending the last 3 days explaining to you. Okay. So with that said, let me just pull up SPY so I could look at it. Oh, we're hitting that level again. So let me just go back here. So, okay. So the first thing I want to do, so we like the stock, we like Microsoft, we want to buy Microsoft. The first thing I'm going to ask myself is, why not just buy the stock? Roger, we have a $5,000 account. Okay, we can't buy Microsoft. Okay. Forget it. Let's move down to here. Forget it. Okay. So see how we're going through this? How expensive is the stock? Buy the stock, forget it. Buy the call option. Well, let me tell you something. Microsoft call option, add the money. Let's say we want to go 3 weeks out. Ouch. Ooh, that's not even 0.70. 0.70 is 5/10 strike, 69, which is fine. It's $1,700. Roger, I signed up for your program and you promised me that I could trade it with a small account. And now I'm going to Microsoft and it's $1,700. How dare you? I'm getting a refund. Not so fast. So remember I said, is it too expensive? We move on. So we forget buying the stock. Call option's too expensive. It's $1,700. Roger lied to us. We can't afford it. We want refund. Not so fast. Debit spread. 0.50 delta. Comes to the rescue. Let's see what a debit spread would cost us in this example. We don't have to even go 0.70. We can go 0.50. Ooh, 0.50. Okay. Now, this is where I answer Naples fan question before. If he was just patient, he would be able to get an answer from me before. 520? Okay. All right. How much is it? Oh, okay. It's not 1,700, it's 1,000. You promised me cheap options. I know, I know. So how much is the 525? 750, 750. So that's about $250. Oh, okay. You're saying that I could buy the 520, sell the 525, and it's going to cost me $250? And my upside is 5 and I'm spending 250? Doesn't that sound like a 2 to 1? And we got 21 days out? Okay, we like Roger again. $250. We won't call for a refund. We're happy. Roger's our friend. We don't have to buy stock for $300 a share. We don't have to spend $1,700 a contract. We can do exactly what Roger promised us at $250 per contract. We have $5,000. We'll just buy one contract at $250. Capiche? Okay, well, but Roger said, but Roger said But that frisky Roger, sometimes he knows what he's talking about. And that Roger said that that he's not really expecting this thing to go really far. I think he thinks it's just because the market is kind of range bound and not doing anything. He said Microsoft is just going to stay where it is. Oh, he did? So it's not really going to move very far. What are we looking for the stock to do? What are we looking for the stock to do? What are we looking for the stock to do? We're not looking for it to do anything. Well, then how about we sell a credit spread? How about we, instead of buying the 520, let's go to 21. Instead of buying the 520 and selling the 525, how about we sell the 520 and buy the 525? And take 50 cents and risk 50 cents. And then if Microsoft doesn't go up anymore, as Roger said it won't go up, we can make 50 cents on the dollar. Weekly cash flow, weekly cash flow, weekly cash flow, weekly cash flow. Sell credit spread right here. So what did we decide? We said we want to buy Microsoft because of the 3 hours worth of lessons I taught you. And it's on my hit list. Wink, wink. Do we want to buy the stock? Well, if it was a $5 stock, maybe. Do we want to buy a call? It's too expensive. We have a $3,000 account. And Roger said we don't have to spend a lot of money. Well, how about a debit spread? That sounds great. But in this case, we're going to do a credit spread because we don't think the stock is going to go anywhere. And that way, we'll take $250 and we'll risk $500 for it instead. Well, wait a minute. Wait a minute. But there's another stock. There's another stock. There's the stock that Roger likes. Roblox. He said he likes Roblox. Okay, so let's do that analysis on Roblox. Now, is Roblox breaking out? No. Is Roblox look like it can't wait to, is it doing this? No. Then we probably want to swing it. Oh, he just said the word swing. Oh, we have to add one more conditions. Day trade time frame. Swing trade time frame. Does this have anything to do with this? Everything. Day trade time frame, 4 to 8 days expiration. Swing trade time frame, 3 to 4 weeks expiration. What are we looking to do? How much time we want to give it? Capiche? Let me just go back here and see if people have more questions or they're just cracking up. SB's cracking up. I love your sarcastic humor. Good. Okay, let's continue. So, okay, Roger used the word swing. He didn't say anything about day trading. As a matter of fact, when he gave us that signal earlier today, he said we may swing trade it, and it's Friday. And Roger this morning said that he's not expecting a lot from the market. So the odds are I probably shouldn't do a 4 to 8 day trade unless I want to just liquidate it and buy it again. So I'll look 3 to 4 weeks on this RoboBlocks. So RoboBlocks, we're going to go 21, we're going to go 28 days out or 21 days out. We'll determine. We're going to go, let's try to do a 0.70 delta. 0.70 delta going 3 weeks out is going to be very expensive. Very expensive, $1,100. Most of you don't have $1,100 or want to put $1,100 for the 122. And if we spread it, let's go 21 days out. Let's spread it. Let's go 0.51. Why? Debit spread. We start with 0.50. We don't start with 0.70. Do I follow my rules? Yes. 21 days out, 0.50. 131 is 515. 132 is 550. It's 470 right here. That sounds like it's less than 50 cents. Well, how about, I want to give this a little room. How about 131, 133? Okay. That's like 80 cents and you have $2 profit potential. Looks good to me. How much did you say you spent, Roger? Well, let's see. 565, 570, about 85 cents. 85 cents for a trade. That I gave you today. Maybe a swing. Maybe a swing. Roblox. Whoops, sorry. So, now, is there anything that I taught you right now that I do not talk about every single day? Debit spread starting with a delta of 0.50. Is the stock going to move? What are we expecting from the stock? And then the last question, liquidity. Liquidity. Because if you don't have liquidity, you're going to be screwed. You won't be able to get the option off. So now I want to show you a little trick that I'm sure that a lot of folks are having. And this is the first time I'm going to talk about this. Okay. So I've never talked about this, but I'm starting to play around with this and I'm seeing a lot of folks having success with this. Okay. And I'm not going to ask you if this was helpful because I know if it was. And if you guys haven't seen this before, then you should watch this video 5, 10 times. I've shown you very, very basic concepts here. Okay. So let me continue. I'm not done yet. Are you all going to tell Raleigh when he comes back that Roger has the ability to focus on teaching and not get involved with the chat if he really wants to? All right. So let me show you a little trick. This will be very helpful to you. And now I'm not going to be sarcastic right now. I'm going to be serious. So I see a lot of you struggling. So let me show you a little trick that I'm really liking a lot. So a lot of times we'll do a trade in the pit and you don't know if it's going to be a swing trade or a day trade. If that's you, raise your hand. Watch, like 1,000 people are going to raise their hand here, right? So let me show you a little trick, okay? See this rule right here? How much time do we want to give the trade? See this day trade time frame, 4 to 8 days? Okay. 7 days, that's 4 to 8 days. So a lot of folks, what they're doing, whether they're swinging it or not, is they're doing a debit spreads for pennies on the dollar that have like 4 to 7 days left. Let me show you, let me give you an example. So let's say you come here, right? Roblox. And this is, by the way, an actual trade idea. So you guys can take it. I'm giving it to you for free because it's Friday. Matt's sick. I had a long week. I don't want to play around. So 0.50 right here, right? You start here. Roger, I'm bad with picking strike prices. Well, you don't have to. The strike price will pick you. Just come down and find a delta of 0.50. Look, 0.50. That's your starting point right there. You don't have to pick option strike prices. It'll pick you. I don't look here. I just look here and go left. So, and if I was just buying a call, I would be right here. See, I don't look here. I look here. The delta tells me what call to buy. Okay. So 0.50, look at that. Let me show you how cool this is. Okay. Let me show you how cool this is. So, oh, Roger's going to do another swing trade. I'm going to go ahead and buy the 67 call for $1,000. Watch this. That expires in 21 days. You just spend $1,000. Watch this. You go right here. You go right here. You start at 0.50 delta at 130 call. You buy it for $3, right? I don't want to do advanced calculations. $3, right? 292, 310, about $3, okay? And then you sell the 131 for 260, okay? $3, that's 40 cents, right? Your profit potential is what? $1, and you paid 40 cents. Okay. Let's say 7 days, let's say 6 days goes by and nothing happens here. But Roger still likes the trade because Roger is a stubborn bastard and he never ever liquidates trades that are trading above the 8 day. It's just sitting here. Okay, big deal. You buy another one. Yeah, you buy another one a week from now for another 40 cents. And then if it doesn't work your way, you buy another one for 40 cents. So instead of spending $10, $1,000 on this option, which you don't have a big account, so you can't afford it, you just spend 40 bucks, 40 bucks per option, 40 bucks per option. And you get a bite of the apple every week. Isn't that a great idea? So the rules are not same day expiration. Don't do that. It has to be at least 4 to 7 days out. So the way you do it is this. If it's Wednesday, if it's Monday and Tuesday, you do Fridays. If it's Wednesday, Thursday, Friday, you do the following Friday. I'm going to repeat this again. Carlos says this is freaking amazing. Yeah, I know it. I know. I wanted to give you guys a nice little Friday because a lot of I'll explain to you. A lot of people in the pit are struggling with this right now. What I'm talking about. So I want to make your life easier. So let me show you. So let's say today is Thursday. You buy next Friday's expiration, right? They expire every Friday. So you're always buying next. So if it's Monday or Tuesday, you buy this Friday's expiration. If it's and then remember, these are short dated options, so they can move like 50, 60 cents. Even let's say you just bought the call, right? 7 days out. Let's say you bought you bought the 130 call. It's only $3. It's not $10. And if this thing moves, it can move. So even if you buy the 130 and you sell, let's say, the 135. Okay, look, 130, that's one. And this is 135 is 118. So 118 minus 3 is, what is it? And here you have $5 profit potential and you spend, let's see, $3 and 120, let's say 125. So you spend $3 minus $1.25 is $1.75. You spend $1.75. You have a week and your profit potential is almost 200, like $1.75 to $5. Carlos says is very happy about this. Thank you, Carlos. So do you guys now, this session has made my pit trades 100% easier. I know it did. I know. Now, that's how I would trade the pit. Now, we ran out of a little time today. I'm going to continue this session next week. But these are all the factors we take into account. Now, remember how easy this is. Look, you're doing the call side. You're above the American flag. You don't have to worry about this side. You're below the American flag. You don't have to worry about this side. Stock. Buy the stock. No, forget it. Buy the call. Go 3 weeks out. Too expensive. Buy the debit spread. Too expensive. Do weekly rollover expirations using this rule right here. That's a whole different discussion, Christopher. That's going to be Monday of next week. Are you selling the same option strike price? Yeah, same thing. Because obviously, look, if the stock has gone anywhere, I mean, maybe a little bit lower, but yeah, pretty much the same strike price. Just always make sure you're delta 0.50 where you start. You're always going 4 to 8 days out, right? So if it's Monday and Tuesday, you do this Friday's expiration. If it's next, and by the way, I just wanted to let you know something. I've been giving you, I don't know if you've noticed this or not, but I've been giving you what I just described. I've been giving you for the last 2 months. I've been sprinkling them as bonuses in the free Telegram channel. Those are the bonuses I've been giving you, short dated debit spreads where you're risking 50 cents to make, and you're like, oh, I bought it for 40 and I sold it for 70. Well, you just made 40%. Yes, he had. Yeah, I have. Can you mention which spread specifically you're talking about? Oh, it's a vertical spread, Sal. It's just a regular vertical spread. Mike, let's not quit your job just yet. Take it easy. So now that you understand how easy it is, and now you understand how you don't have to spend $1,500 like on options every time. You could spend $50 or $100 every time we do. It makes the pit. Now, if you have a big account, just keep doing what you're doing. But I hope you guys could see how this could completely change everything and really turbocharge your gains. Really turbocharge your gains. And that way you're like, oh, I lost 80%. Okay, you lost 80%, but you lost 80% of $150. Then just do another spread if I hold it. And by the way, when you take what I'm teaching you into account with the fact that we've had a 94% win rate, you don't really have to roll over very often, do you? And those options, those weekly options, every time that stock makes a 50-cent move, instead of like the 3-week option, like it goes up 20 cents, this thing goes up like 50%. You guys know how it works. Short dated options really move. So this way you get a chance to spend a lot less money, make a lot more money, and risk and have more fun. Yeah, of course you could do it with a big account too. Thank you. See, now what I want you guys to do is, if you don't have the pit yet, and by the way, today is going to be the last day. Today is going to be the last day that I am doing this. This is it. We're running out today. Do you guys want me to give you these notes? Tell me before I close the chat and give you